TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Okay, folks, good afternoon. Welcome to another edition of Breakout Investing with Ken Shreve. My show airs every Tuesday and Thursday from 3 to 4 Eastern. You can also find me on Channel 1 on Tiger TV at TFNN.com. You can pick the show up on iTunes or listen live on your smartphone at TFNN.mobi. Number to use to talk to me to get through today is 877-927-6648. Have a question about the market, a stock, what you're thinking about things, 877-927-6648. Don't forget to check out a 2-week trial to my Ultimate Growth Stocks newsletter at TFNN, launched a few weeks ago. It's updated every week on Tuesday with email buy alerts, sell alerts, and market updates in between. I keep a model portfolio of stocks. Pleased with the performance so far, and I'd urge you to check out a trial to my newsletter. Turning to the market today, let's take a look, see what we have going on here. Dow's up about 33 points, 0.3% to 12,593. The Nasdaq up just over 6 points, 0.2%, to 2821, and the S&P 500 up 1 point. 0.1% to 1341. So stocks are trying to, extend gains from yesterday. Obviously, it was a good day for the market yesterday. We had the release of the Fed minutes, maybe a little bit anticlimactic now that the Fed is having a news conference at the end of every policy statement. So, yeah, listen, the market liked what it heard from the Fed yesterday. There was a nice rally in the market. Of course, people are going to continue to talk about this lack of upside volume. I've been talking about, distribution that's been seen in the market since May 3rd. A lot of leadership has broken down not only the commodity stocks, but some leading growth stocks out there under quite a bit of pressure as well. So yesterday's performance was solid, but the lack of volume certainly was cause for concern. Okay, so the Dow up about 30 points to 12,589. Like I said, a lot of people asking me in the market today, Ken, are you in the market yet? What are you buying? And my answer remains no. The Nasdaq is 3 days into a rally attempt. It's managed to move back above its 50-day moving average, but the bottom line is that this market needs to prove itself more to me. This is just day 3 of a rally attempt. For those of you that know me, I spent many years at Investors Business Daily, and when you see distribution in the market and you see leaders start to break down, you really want to look for a follow-through day. Look for signs of life in the market. And right now, 3 days into a rally attempt, we're still going to look for a follow-through day. The last time the Nasdaq showed a follow-through day was back on March 24th. It wasn't a powerful one. The percentage gain was only about 1.4%. The Nasdaq rallied for a week or two. Some selling came back into the market. Nasdaq started to move higher again, but it really wasn't that powerful a follow-through day. So typically on day 4 or later of a rally attempt, you want to see an unequivocally strong percentage gain, generally in the area of 2% or more, and you want to see volume pick up from the prior session's level. So day 3 of a rally attempt today for the Nasdaq, and tomorrow is options expiration. So if we do see a nice percentage gain tomorrow, 2%, big pickup in volume, that would be a sign that the market trend is perhaps ready to turn upward, and I would at least feel more comfortable about the prospects for some sort of rally. But people asking me if I'm in the market, I'm not yet, because I still need to see more. I still need to see this market prove itself more. And frankly, I wouldn't mind to see the market consolidate a little bit more. My stock screens really tell me when to be in the market, and I just really feel like I have to look long and hard to find anything out there worth buying. So that's an important message to listen to as well. So a little bit more consolidation wouldn't be a bad thing. We're only 2 weeks into a consolidation, so that's kind of where I'm at right now. Taking a look at gold today, gold for June delivery, that was down $3.40, only 0.2% to $14.9240 an ounce. Silver, July silver lost 17 cents or 0.5% to $34.93 an ounce, and oil, crude for June delivery, fell 1.7% to $98.44. We had some economic data today that was not that great. I mean, you had a good drop in weekly jobless claims. They were down 29,000 to 409,000. I think that was a little better than a little bit bigger drop than was expected, so that's good. The 4-week moving average, however, edged up slightly to 439,000. More bad housing data, existing home sales for April. The National Association of Realtors said that sales fell to an annual rate of 5.05 million units in April from a downwardly revised 5.09 million in March. Economists were looking for an increase to 5.23 million units. We had housing starts earlier this week that were disappointing. Next week we have new home sales, so those looking for signs of life in the housing market might have to wait a little while longer. The housing data today not very good. Finally, the Federal Reserve of Philadelphia reported that business activity among manufacturers in the area grew in May, but at the slowest pace in 8 months. Its index of current activity sank to 3.9 in May from 18.5 in April. 2 months ago, this index reached reading of 43.4. That was the highest level since January 1984. So that's where we're at. Decent performance for the market today. Again, the Dow up 30 points, 0.2% to 12,589. NASDAQ up a little over 7 points, 0.3% to 2821, and the S&P 500 up 1.5 points now, 0.1% to 1342. So let's see here. I'm going to just try to get my chart hooked back up here for people in the Tiger's Den. I got knocked offline here. But you know what? I think I'm going to have to do this. I think I'll do this on break. LinkedIn IPO today. Obviously, that was a big deal. A lot of my colleagues at Real Money today were talking about this and, frankly, kind of scoffing at it. I mean, this was an IPO that, remember, it was originally going to price between $32 and $35 a share. It was raised, that offering price, to between $42 and $45. Well, LinkedIn opened today at $81 a share. At last check, shares were trading around $107.40, up 32% on the day. Certainly it does have that feel of 1999, that internet bubble where all these stocks were going public. You know, the thing with LinkedIn is that they do have revenues. I mean, they do have several $100 million of revenues that they did in 2010, but it's not profitable yet. So there are similarities, and I think that the success with the LinkedIn IPO, certainly other social networking sites like Facebook, Groupon, and Zynga could very well accelerate their IPOs. They have not set dates when they're going to come public, but looking at the success of LinkedIn today, you'd have to think that Facebook, Groupon, and Zynga would think seriously about having their IPO. But it certainly does feel Certainly does feel like a bubble, a stratospheric move today for LinkedIn, and that trades under the ticker symbol LNKD. You've heard me talk about IPOs before. I'm generally not a player on the first day or two of trading. Of course, it's tempting to chase these things and maybe flip them. Buy in the morning, sell a couple days later, but I really don't invest like that. So LinkedIn, I think if this thing could hold over the next week or two, say between so I don't know, $75, $80 a share and $100, and form a little base and show that there's good support out there for the stock at current price levels. I think that would be constructive action. But without the profitability, I mean, I think this is still a very speculative company. So LinkedIn, I mean, they're a professional networking site. They get a lot of revenue from services that they offer to businesses. Company says they have about 3,900 companies that are using their recruiting service. They had 100 million members in March. More than half of its members are based outside of the United States. The company is seeing strong growth in Brazil, Mexico, India, and they even included France in there as well. So it will be interesting to see what what Facebook and Groupon and Zynga do. We've talked about a sort of a rejuvenated IPO market in recent shows, and I think we're going to see more IPOs later in the year, and so we'll see how that goes. In other news, Thermo Fisher Scientific shares are recently up 4% to 65.23 after the company said it plans to buy Swedish firm Fadia for $3.5 billion in cash. Fadia makes blood testing systems for allergy and autoimmune disorders. So, again, a decent day for the market today. I think it's still too early to start partying like it's 1999. Remember, the last real powerful follow-through day that we saw for the market was back on September 1st last year, and that's my model portfolio was up and running at the time, and that was the time when I really started putting money to work during the first part of September, even towards the end of September. There were a lot of stocks coming out of bases, but you have to remember that was after a meaningful market decline. So really powerful follow-through days occur after you've had some significant selling in the market. Now, indexes have come in a little bit since early May, but what are they? Maybe 2%, 3%, 4% off their recent highs. So really, I wouldn't mind to see some sellers get shaken out of this market a little more. I think it would set the stage for a powerful follow-through day. So if we do see one, the earliest we could see one would be tomorrow. That would be day 4 of the rally attempt for the NASDAQ. Again, looking for a big percentage gain in higher volume. Tomorrow is options expiration. It's not out of the question. So if we do see one tomorrow, hey, I'd be a little more optimistic about the potential for some more near-term gains. But if we don't get one tomorrow, then we'd wait till next week. Monday would be day 5. Tuesday would be day 6. Again, just looking for a sign of strength by the market to tell us that it's ready to move higher. Until then, I think it's still a risky environment to be initiating new positions. When I buy a stock for the model portfolio, I really want to feel like I'm going to be able to hold it for a period of time and not have to worry about cutting losses or taking a quick profit because of
process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, folks, welcome back. Ken Shreve with you. Breakout Investing with Ken Shreve on TFNN. For people in the Tiger's Den, I have my charts back up. And I wanted to talk about the dollar. The dollar has been on a losing streak now for 4 sessions in a row. Probably the best way to keep track of the dollar is with the popular ETF, the UUP, the PowerShares U.S. dollar index bullish. And in recent shows, I've talked about the fact that the dollar fell below its 50-day moving average, and then just last week, the week before, it really started to show some strong accumulation, came up hard off its bottom, but now for 4 days in a row, it has been falling in price, and that's caused the commodities to bounce back a little bit, and it's also giving the market an underlying bid. Again, the Nasdaq is now working on a 3-session winning streak, but we talked about the fact that the UUP could face resistance at its 50-day moving average, and it looks like that could be the case. It made a strong move last Friday, closed above the 50-day moving average, and again under pressure ever since. Mentioned gold. Gold today was down $3.40, 0.2% to $14.92 an ounce. Let's take a look at the GLD. That's an ETF that tracks the performance of gold. You can see the GLD technically still looks pretty good. It's been under quite a bit of selling pressure. I think there's been frankly, some unequivocal institutional selling in the GLD. It doesn't necessarily mean its run is over. Just like there's been institutional selling in the broad market, doesn't mean that it's just gonna stop a rally completely dead. I mean, we could see more strength in the indexes, but the GLD under some distribution recently, but it's still holding pretty firm above its 50-day moving average. A break below the 50-day line, that's a key support level. You would expect lower prices. Also mentioned silver today. We could take a look at the SLV. Pull up a chart here. You can see the iShares Silver Trust actually broke below its 50-day moving average recently. Now, this is a situation where the 50-day could very easily turn into resistance for the SLV. Silver, the SLV was recently down 0.5% to 34.05. So that's a quick look at some of the metals. I mean, really the market right now, I mean, is sort of the dollar has a stranglehold on it. When the dollar strengthens, the market's going to go down. When the dollar weakens, it's likely going to go up. So, I mean, can the market go up from here? Yes, I think it can. Again, I'd like to see some sort of follow-through, a sign of strength by the NASDAQ, the S&P 500, any of the major stock indexes. All you need to see is one index show a sign of strength. Preferably, it's all three in unison. But if we get a follow-through day in the market, either tomorrow, sometime next week, the following week, it would make me more comfortable that we could get more gains here, more profit opportunities. All right, wanted to take a look at some other stocks here today. Gainers in the Dow. I'm going to pull up a chart of McDonald's, popular restaurant, of course. This stock has really been going gangbusters recently. One of the top percentage gainers in the Dow today. You can see a chart of McDonald's. It's working on 4 straight weekly price gains, so it is looking a little bit extended here. But the strength in retail in recent weeks. We're going to get into some earnings reports today in the retail sector that don't look so good. But McDonald's, strong performer in the Dow today. Shares are recently up 1.2% to 82.49. In earnings news, let's take a look at some other stocks here in the retail sector. A couple of bright spots in retail. In terms of earnings reports today, there was more bad news than good news, I think, in the retail sector. But PetSmart is having a great day. Shares up about 7.5% to 45.71. You can see a good, strong, heavy volume breakout here. PetSmart, good earnings today. They're based in Phoenix. Their sales were up 7% to $1.5 billion. Earnings up 33% from a year ago to 61 cents a share. Another bright spot in retail. Let's take a look at Dollar Tree stores. We talked about Walmart having a tough time in their latest earnings report just recently. Dollar Tree stores taking business from Walmart. You can see this stock, big gap up today. Shares recently up 3.6% to 63.57. Dollar Tree doing good business. EPS up 34% year over year. Sales up 14% to $1.5 billion. When we come back, we'll take a look at some other gainers, some other decliners today. I'll talk to you a little bit more specifically about ultimate growth stocks. So stick with us, folks. We will be right back.
Time Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to tfnn.com today. Click Investment Newsletters and get Ken Shreve's Ultimate Growth Stocks for free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Colin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of tfnn.com or check them out on the American Stock Exchange, symbol GBG.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to tfnn.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from tfnn.com.
Okay, folks, welcome back to Breakout Investing with Ken Shreve. We went into break and talked about a couple of retailers that reported nice earnings today. PetSmart up nicely, and also Dollar Tree stores. There's another interesting company called Broadsoft that is catching a bid today. Sometimes you're going to hear me mention the word technically damaged. I mean, there are technically healthy stocks, and then there are technically unhealthy stocks. And Broadsoft was actually a stock that I was eyeing recently especially when it was finding support at its 50-day moving average. But then sellers came into the stock, and then the company reported earnings right in this area here. But you can see that stock is having a good day today, up 5.8% in very heavy volume, recently trading around $40.82. This is a stock that went from looking technically pretty sound to not that sound right now, but it is interesting to see the big move in heavy volume today. There isn't any news that I can find, but it is a fast grower. I mean, this is a company that there does appear to be a growth story here. Broadsoft is they recently reported very strong earnings, bottom line, top line growth. They're a provider of residential and business voice over internet protocol application software, so it allows for real-time communication over the internet. The numbers they recently reported were pretty sound, but again, this is a stock that you have to pay attention to the recent institutional selling that the stock has experienced. Good day today, nonetheless. Again, up about 5.8% to 40.82, and there is a growth story here that I think is worth paying attention to. Another gainer today on strong earnings. We've talked about some of the destruction of the China internet names, but NetEase.com is having a good day today. We'll take a look at NetEase. They reported earnings yesterday, and this is an example of a stock that's technically damaged. It came down, crashed through its 50-day moving average, which is a key support level for a stock. It's often an area where big investors will often come in and add to a position. When a stock breaks below the 50-day moving average in heavy volume, it's a technical sign of weakness, and it's usually a sign the stock is ready to take a breather, consolidate gains for a long period of time. So NetEase having a good day today on strong earnings. Shares are up 2% to $46.90. Still below its 50-day moving average at about 48.5. So again, that area could be a resistance level for NetEase. NetEase.com is a provider of online games in China, another company benefiting from huge internet usage in China. Profit at NetEase was up 69% year over year. Sales grew 34% to $229 million. Folks, we've talked about the distribution that's been seen in the market since early May. It's a reason why I'm still cautious and not ready to aggressively allocate capital in my ultimate growth stocks model portfolio. I will at some point, but I'm just really waiting for the market to give me a signal to do so. We're day 3 of a rally attempt for the NASDAQ. Typically, you want to see a follow-through day. You want to look for one on day 4 or later of the rally attempt. Again, this is a sort of a timing strategy that I learned during my several years at Investors Business Daily, and they do have a good track record of success. Again, the best one that we've seen recently was back in early September 2010. Saw a weaker one earlier this year on March 24th for the NASDAQ. That it gave us a little bit of a rally, but not much. So if we do see one this time around, I suspect it's probably going to be a tradable rally as opposed to launching a new bull market. Remember, we're 3 years into a bull market now. So again, I think probably the best thing we could see right now would be a little bit more consolidation, give stocks time to set up, and then that's where the good buy points are going to be seen. Doesn't mean that I'm not going to be buying, dipping my toe in the water here and there, especially if this rally continues. So we'll see how it goes. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to tigermetalexchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks, to Breakout Investing with Ken Shreve. Quick check on the markets here. Dow up 31 points, 0.2% to 12,591. NASDAQ up close to 7 points, 0.2% to 2821. And the S&P 500 up still around 1.5%, 0.1% to 1342. We have Tom on the line from Tampa who wants to talk about
Ken,
trailing stocks. Good. How are you?
Good. Hey, Ken, trailing stops, what percent, you hear all different, percents. I mean, I hear 7, I hear 8%, 10%. What do you think is a good percent to use on a trailing stop?
I mean, on a general rule of thumb is that I will probably set trailing stops right around 4 to 5%. But it's really a matter of preference. I know people that use them use all different. Sometimes it's 2 to 3%. Sometimes it's 5%. I know some people that I've talked to during my years when I was with IBD that just used the 8% rule, even with trailing stops. But typically, on average, I keep it probably 4 to 5%.
Yeah, reminiscent of a stock I would say Livermore even said something about 10% one time.
Yeah, I mean it's just a matter of preference, and I think it also depends what kind of stock you're talking about. I mean, and it also depends the type of market you're in. I mean, here we are in a period of time where we've seen some distribution in the market. It's obviously not an environment that's conducive to making money. However, you have some recent breakouts that are working and still holding gains. But in a market environment like this, I'd be more prone to use the trailing stops. And then when you get a good powerful follow-through day and you're seeing breakouts left and right, I tend to let my winners run there, and I'm not eager to set trailing stops. I want them to work as long as possible.
Okay. Tomorrow, Ken, you think we're looking for some pretty good upbeat action, being option expiration Friday?
I mean, the Nasdaq 3 days in a row up for the Nasdaq, I think is compelling. It's really, you know, normally during options expiration you tend to see volume pick up. You know, really nothing would surprise me in this market. I've talked to a lot of people who aren't really feeling good about things. They think that there are plenty of yellow flags or enough yellow flags out there to think that we could come in more here. But you know, Tom, when a lot of people are leaning one way, the market can often do the opposite. So at this point, you know, hey, let's hope we get a sign of strength, a big percentage gain and higher volume, and you know, look for opportunities to put money to work.
Okay. All right. Thanks, Ken.
All right. Hey, appreciate it, Tom. All right, Tom from Tampa asking actually a common question about trailing stops. You know, you buy a stock and, you know, you're up 15 or 20% over a few weeks' time. You know, where do you, you know, you buy at 15, the stock runs up to 20. Do you set a trailing stop at 19, 18, protect profits? That's something I do when I'm buying stocks in an unsettled market. I tend not to use trailing stops when, again, as I explained to Tom, when you get a powerful follow-through day and you really have a good idea that the market trend has decidedly turned upward, I tend not to be quick on the trailing stops because I want to buy powerful breakouts, and I want to give these stocks time to work. Back in September last year, we had the follow-through day for the Nasdaq on September 1st. There were a lot of powerful breakouts that happened at that time, and frankly, you know, putting trailing stops on wasn't even in my mind, and there are still some stocks in my model portfolio that I'm holding, you know, back from that time. So, you know, when you're buying stocks and there are signs of distribution in the market, it's okay to take quick profits. And I frankly, in a market like this, if you're buying stocks and some stocks are going up, I wouldn't be afraid at all to use trailing stops. So. Anyway, we talked about some retail, busy week of retail earnings this week. There were probably more, you know, bad news in retail earnings than good news. There were several really high, what I consider high-quality retailers that reported earnings, and shares were down quite a bit. I want to take a look at Advance Auto Parts. I mean, this was a perfect example of a stock that was setting up beautifully, and you see a beautiful breakout right in this area here. It was about a week ago. Broke out of a nice consolidation. Volume was heavy. It extended gains. And then sellers came into the stock earlier this week on Monday and Tuesday. The stock rallied yesterday along with the market, but then shares gapped down sharply today, down 10% or so to 63.31. Advance Auto Parts, of course, a retailer of auto parts. They reported first quarter results that missed Wall Street estimates. Quarterly profit rose 13% year over year, while sales rose 4% to $1.9 billion. This is the problem. I mean, this was obviously a news-driven downward move today, but it just shows you how, in this type of market, how technically healthy stocks can fall apart in no time. I showed you Broadsoft earlier, ticker BSFT, a stock that looked like it was going to bounce off its 50-day moving average, and then sellers immediately came into the stock. So technically healthy stocks are going to really have a hard time making headway, which is another reason why I'm just hesitant to aggressively commit capital in a market environment like this. I've made 4 new initiations in my model portfolio over the past month. Some are doing well. Others are just not making a lot of headway, which isn't really surprising considering this unsettled market environment that we're in. Another disappointing earnings report from really what I consider to be a very high-quality retailer, Williams-Sonoma. This is a company that has really made it a habit of recent quarters of knocking the cover off the ball. Very, very strong price performer. This was a $33 stock back in February. Shares recently hit a high just over 45. Stock is down 5% today to 41.08. Fell sharply. It's sitting right at its 50-day moving average right now, but this is a stock that, you know, with a heavy volume downside decline like this. It looks like a stock that's ready to consolidate gains for a while. It may form another base and decide to move higher over time, but this is not a stock that I would touch now, considering the heavy downside volume. Net income at Williams-Sonoma rose to $31.6 million, 30 cents a share. That's up 30% year over year. Revenue rose 7% to about $771 million. That was also ahead of expectations. But, a lot of good news priced into Williams-Sonoma. So sellers are in the stock today. Limited Brands also down 3% to 41.02 on weak earnings. We'll be right back.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks for free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Okay, folks, welcome back. back to Breakout Investing with Ken Shreve as we head into the close. A little more than 5 minutes left to go in the session. A little bit of strengthening into the close here. Good to see. We really haven't talked about the volume today. We talked about yesterday's low volume rally for the NASDAQ and on the NASDAQ and New York Stock Exchange, and really just sort of a lack of conviction behind the buying after the release of the Fed minutes. Today we're strengthening into the close, but NASDAQ volume tracking looks like it's going to come in below Wednesday's level. So again, not much volume behind the buying. Volume on the New York Stock Exchange pretty close to Wednesday's levels. Looks like NASDAQ volume could end up being around 1.8, 1.9 billion shares. That's right around its 50-day moving average. So the Dow up about 41 points, 0.3% to 12,601. The NASDAQ up nearly 10 points now, 0.3% to 2824. And the S&P 500 up nearly 3 points, 0.2% to 1343. So a little bit of strength into the close. NASDAQ working on 3 straight gains, but 3 straight gains does not a new uptrend make. So I want to be sure that this recent rally means something. Again, we're going to be just looking for a follow-through day either tomorrow, sometime next week, or even the following week. Just a good sign of strength, a nice percentage gain and higher volume by the NASDAQ, hopefully the S&P 500 and Dow as well, to confirm a new uptrend. I suspect if we do see a follow-through day, an educated guess is that it could turn out to be something like we saw back on March 24th when the NASDAQ followed through. That was not a powerful follow-through day. It was only up about 1.4%. Again, typically you want to see a 2% gain or more. But if we do see a follow-through day sooner rather than later, hey, if it's a tradable rally, we'll take what we can get. The holding period for stocks might be a little bit shorter, but if we can get 5 or 10% here and there, we will take it. Coming up, well, before I went into break, I talked about some weak retail earnings reports, and we stopped on Limited Brands. I mean, probably one of my favorite retailers, but the stock is technically very weak today. Limited Brands has made a huge move since breaking out of a lengthy consolidation back in April. It ran up from $33 a share all the way up to $42. Stock is down about 4% today. A big rush of trading volume. The company's earnings, just flat out disappointed. Stock is down again 4% to 40.67. Institutional selling like this is worth paying attention to. If you were fortunate enough to buy Limited Brands when it during its last breakout in April, when it broke out over $33 a share thereabouts, you've been given ample reason to probably lock in partial profits or even full profits today. So that's earnings from Limited Brands. The earnings weren't bad. The earnings were up 60% year over year. Sales up 15% to $2.2 billion. Limited Brands operates Bath and Body Works, Victoria's Secret, and La Senza retail chains. Coming up after the close, earnings from Salesforce.com. That's going to be interesting. This was a former high flyer that has run into a little bit of trouble recently. They are a provider of on-demand customer relationship management software. So Salesforce.com shares were recently trading up 1.4% to 136.10. Stock is also working on a 3-day winning streak, recently moved above its 50-day moving average. Wouldn't be surprised at all to see a strong number from Salesforce.com. They're expected to earn 27 cents a share, with sales up 28% to $482.5 million. Again, that's after the close today. Also watching earnings from Intuit, a provider of business and financial management solutions. Shares were up 2% to $55.30 ahead of their earnings reports. Coming up next, the Tom O'Brien Show. Folks, we will talk to you soon. Thanks for listening.
Great Basin Gold is an